Tesla was really rough to trade this week. Number one, because of earnings. Number two, because of this massive squeeze that's been going on within the bigger time frame charts. My goal in this video is to share with you what I'm currently doing as far as positions, why I closed out my short-term calls, but why I'm actually holding on to my longer dated calls, where I think this breakout or this breakdown is going to happen, and how this squeeze is going to play out. Now, the first thing that we have to do when we're looking at a chart is zoom out to the macro and understand two major things. Number one, what is the current structure of the market? And number two, are we getting in at a discount or are we paying a premium? If we take a look at Tesla, one of the good things about the structure of the market right now is that we switch from a bearish market structure back here through 2023 to 2024, now into bullish market structure. And what this means, and basically any stock is going to move in these two types of structures, is that instead of making lower highs and lower lows each and every single time the stock is moving, we are instead now actually making higher lows every single time that we pull back, and hopefully higher highs on this next breakout. This is a sign of bullish structure, and this is exactly what we want to see. Now, the second thing that we want to understand is the market currently trading at a discount, currently trading at fair value, or is it currently trading at a premium? Now, the way that we do this is through Fibonacci retracements or the market bias tool. If you want to get all the indicators that we're going to go over in this video and learn how to draw these zones on your own, check out all of our free courses. The links will be in the description. The BX Trender course is going to show you buy sell pressure, and the Smart Money Mastery course is going to show you how to actually draw these zones. When a stock is pulled back into this institutional buy zone, it means that the stock is trading at a significant discount. And what we want to be doing as fund managers is buying a stock while it's trading at a discount, but only when it's trading at a discount within bullish market structure. This is why we were buying back here in August of 2024, playing this breakout. We stopped trading this predominantly through February and March because we were not at a discount. And on top of that, this BX trender on the weekly was showing lower lows. Those are both reasons for us not to touch a stock. And we really started focusing on this back here during April and May. So looking at this, we understand that we are not trading in a discount, but we're also not trading at a premium, which would be up here in this bearish smart money zone, which means that we're trading at a fair valuation. Now, we became bullish on this again back here, as we said, in April. And this is when I opened up my call options expiring in 2026. I have 10 $370 calls expiring 9/18/2026. Our plan was to hold onto this position until price moves up into the bearish smart money zone, which is about $430, or until the weekly BX trender flips from green to red. Now, earlier this week, when price was selling off aggressively and we were trading at $300, that was showing red. But the most important thing about our strategy is that we do not trade based off of what's currently happening. We trade only based off of candle closure. And you can see that the daily, which we're going to talk about in a moment, bounced and actually closed the weekly BX trender green. So that means everything on the bigger time frame is still a go, meaning that price action could still break out up to our $440 target that we've been talking about for a while now. So with that out of the way, let's now move into a smaller time frame, such as the daily chart. Now, the daily chart, we are going to look at the same type of premise. You'll see that with this daily chart, structure is still bullish. Price is still making higher lows, but it's also making lower highs. So when price is making higher lows and lower highs, this is indicating a squeeze. Now, normally when price is squeezing with equal lows and equal highs, it's going to break out with the current macro structure. This is why we went over the bigger time frame, because if it breaks out with the macro structure, well, the macro structure is bullish, which means that this could break out to the upside, which is what we want. And you will notice here that every single time that price pulls back into the smart money discount or into this institutional buy range, price bounces right into the bearish institutional sell range and institutional smart money zone. And we've been talking about these resistances and these supports for the past couple of weeks because we figured that this was not going to break out or break down until earnings because we need a catalyst to break this major support at 300 or we need a catalyst to break this major resistance at $340. And I thought that earnings was going to be that catalyst. Well, on earnings, we had, in my opinion, a pretty weak call, pretty weak numbers, not as bad as a lot of people were really expecting or people thought that they were, but overall the call was a little weak. Now, the next day, right, today, we end up having 2 days later, we end up having news come out that they're going to expand Robotaxi to San Francisco. That's a very good sign. That's what we want to see. And the market took to this very well. You can see that price bounced right in the institutional buy range and is up now about 5.5%. Now, I closed my short-term calls for a loss here on Thursday. The reason that I closed these calls is because that daily BX trender closed red. And the first thing that I want you to understand is that even though I close those calls, if this were to fully recover, I'm not upset because I can't control what happens in the market. I can only control my ability to stick to my system. And I would rather sell, stick to the system, and then end up having to get back in next week than not stick to my system and have the stock break through those support zones because then it's not the system, it's not the law of averages that lost money, it's me and my decision making, which is not something that I like to do. I'd rather just stick to the system, let it play out whether it's a win or a loss. Now, with all of this said, the major thing to remember, the weekly is still showing buying pressure, which means there's still a chance that this breakout occurs. I will continue to hold my 2026 calls until that weekly shows red on the BX trender. If price action next week fully recovers and we sweep, meaning we break through this bearish smart money zone at 340 and the secondary bearish one at $350, then this thing is easily going to run to $400, which has been our best case scenario for the past couple of weeks and past couple of months. Subsequently, if the opposite happens and price ends up breaking down, if next week we sell off to 300 and we break 300 and then the weekly turns red, well, guess what? Then we're going to snap this support level and price action is going to most likely sell off down to that $250 range. Now, for those of you who don't follow me a lot here, you're probably saying, no shit, Sherlock, it's either going to go up or it's either going to go down. That's not the point, right? The point is understanding why something is going to happen, right? If these resistances, if these smart money zones to the upside get swept, then we're going to move up to the next smart money zone, which we know is at $430. If these supports get broken, then the next level we're going to pull back to is $250. So it's not about where is it going to go. It's about if blank happens, then blank will occur. And that is how you trade because you cannot predict the future. You can only react to what is currently happening in the market. So now let's talk about potential downsides. We already went over if this support level, if this institutional zone ends up breaking, what's going to happen from there? Well, if we're looking at that bigger institutional support zone from here, that's what's going to happen. We would end up breaking 300, price would best case sell off 20% from where we are, really about 25% from where we are into this $250 to $260 level. From there, we would need price to bounce, hold that structure of making higher lows, and then I think we would end up taking that breakout back up to all-time highs. That would, in my opinion, be the worst case scenario. And of course, if this smart money zone at 240 breaks, that's where we are in some serious trouble. But as of right now, the macro looks fine. Everything looks good. I did manage my risk, took my short-term calls off the table, but I'm still holding my longer-term ones. As always, guys, thank you for all the support. Truly means the world to me. If you want to learn our system completely for free, the link to all of our courses are down in the description. I'll see you next time.